Hello, everybody. Welcome to the On-Chain podcast, episode 2. I've got Noam Zeigerson as my guest today. Very pleased to bring Noam on board. I think we've been chatting for 6 months now, maybe a little bit
Yeah,
longer.
yeah,
Um, in particular, what the reason I wanted to bring Noam on is because of his experience across neobanking and regulatory formats. So he's very knowledgeable. He's run teams from both a technical standpoint and a product standpoint, and kind of really was one of the early mergers of the kind of CPTO type position. So um, do you want to just give us a real kind of brief overview, just what you're about, and what your history is known before we head into it today?
yeah, sure. Thank you again for inviting me, Toby. It's really great to be here. Yeah, I'm Noam. Build tech companies. I build my own companies as a founder. I worked with co-founders. I worked for founders. I even had the chance to work in very old big bank to do like digital transformation for those guys, and yeah. Managed to enjoy a couple of exits and one IPO. So quite exciting to take tech companies to really successful, highly performing journey, especially with amazing team. Love work with product and tech people. Love to solve problems, real problems for real people. And I think a lot of the topic we'll talk about today is also related to people's problems and why are we doing this product and tech stuff and why is it so important. So yeah, happy to be here. That's me.
Good, good. Well, look, I mean, one of the kind of the overarching topic, if you like, today. I haven't quite figured out what we're gonna put as the title really for this one, but um, what we're looking to achieve is understand a little bit more from an internal perspective, someone who's been in these environments. So, Noam has seen a couple of successful exits, as you mentioned, in particular with neobanking. What could you just give us a kind of an overview? What is neobanking in comparison to like traditional banking?
Yeah. Yeah, really good point. So I met banks early in my career. I was doing data platforms. We had a startup building data platforms with analytics and reports and dashboards, etc. And we had all sectors. We had airlines, retail, communications, homeland security. We had all sectors. But funny enough, the ones I loved the most were always banks. And the reason bank were such an exciting customer for me because they had like real customers, real people struggling and dealing with real life problems because everyone need a bank account, everyone manage their life somehow with money. So and especially when you build data solutions, you find yourself in the core of the behavior of the consumers or the if it's a B2B of the corporates. So data tell a lot about the story of the customer. And those banks, some people think of them, the old banks, as like evil, but they were never evil. They were always trying to do their best under very heavy regulations that the countries put on them, just to keep the system safe and stable. But they tried to do their best. So yeah. So to your point, you know, during let's say even 100 years, they accumulated a lot of what's called technical depth, or even let's call it business operating models that started to become not fit for purpose. And when you are 100 years old bank, it's very hard to modernize. It's very hard to transform to become suddenly digital and techy and change all your papers into PDFs, etc. So many of them tried their best, but at some point, I think UK was one of the leading countries. The government saw that it's way too slow and came with this idea of neobank license. So before neobanks or challenger banks, to get a banking license, you had to have a lot of capital, a lot of money, and a platform, a technology. Now, no one new had both, right? You had to be a HSBC or a Citibank to come to the UK and get a license. So then the government kind of encouraged the regulator to come with a new license, which is a startup license. You don't need to have anything. You get a license limited for a number of consumers, and then slowly you build your platform, you get your capital, and then you're allowed to serve more and more consumers. And that allowed really building banks from greenfield, like really fresh, no all these old constraints that most banks unfortunately carry on their back. And that opened this amazing opportunity to start clean. By the way, many of the old banks who didn't know how to tackle these neobanks, they said, okay, let's do side by side. As a old legacy bank, we will build a little neobank next to us, give it even a different brand, so maybe it will attract a segment of more like hipster customers. And then we will build our new platform, our new technology side by side. And when it will be mature, we will pour the customer into the new tech, into the new bank. Some of them said, oh, this will be too hard. Let's build a digital layer of applications on top of the 80 mainframes that we have in the back end, and that will be fine. To be honest, I don't know really to say what succeeded more or less. I think at the end, neobanks kind of made much faster progress than the old traditional banks. But yeah, yet to be seen how this story will evolve.
Yeah, I know very much. That's really where we're heading the direction today. So, I think going back to my childhood, I remember going to a bank, just queuing up for ages, and even my early adult years. The whole world has really changed now, and this kind of this was almost the first steps, wasn't it, to the new direction. So I think one of the kind of the key question I wanted to head it off with. So, with the emerging crypto industries and stable coins, RWAs, tokens, etc. There's various different silos within crypto. Where are the similarities between neobanking and crypto, and do you think that there is more trust from the kind of the average consumer with regards to working for a neobank engaging with a neobank as opposed to buying crypto tokens, for example?
Yeah. Yeah, this is really good point. I think that both came from pain, right? At the end, product is successful if it really solve a real problem. And I think the real problem people started to see with the fiat coins, the traditional government-owned currencies, and with the traditional banking or even neobanking is trust. Like, you see a lot of cyber attacks, a lot of, centralized powers, suddenly terms and conditions get changed. And more people started to feel, is my money safe in the bank? Like, really, will my money can be stolen by some kind of cyber attack, or maybe nationalized by some government crisis, and suddenly I won't see my money again, right? So this is where suddenly blockchain, which is a fully decentralized network of computers running across the globe, like a decentralized mainframe. So actually blockchain is very similar to the bank mainframe. The bank mainframe at the end is a general ledger. It's an accounting computer that watch your money. Money come in, money goes out. Money come in, money goes out. That's what a bank is a big general ledger. What blockchain is the same, is a big general ledger, just it's running all over the world with multiple copies, not governed or supervised by any corporate who can kind of put their hand or change the terms and conditions. So suddenly, crypto solved the problem of cybersecurity because you cannot attack thousands of computers. Even if you attack 10, 20, 30, the blockchain will recover. And the ability to know your terms and conditions, right? Because with a blockchain, the smart contract is fully solid. You cannot like now go and change the conditions in your ledger. The moment it's launched, it's there and no one can change it. And no one can decide, okay, you know what, we take 50% of your money. So I would say neobanks, to be honest, are still banks, right? They are regulated under PRA, FCA, or any country has its own regulators. So neobanks are still 100% end-to-end a national bank under the national regulator, while crypto is not, right? So I think for many people, this is very much appealing to know that their money is in a place where it is safe from cybersecurity and not conditioned to any change of terms or regulations where it's there. Will they be able to bring it back to the country? That's, of course, in the hands of the regulator.
Yeah.
But once it's there, it's kind of very safe, let's say.
Sure. And do you, in terms of where we're standing at the moment with advancements, in particular within crypto, for example, like stablecoin, there's been huge waves recently due to the Genius Act and essentially P2P payments and remittances are speeding up and lowering the cost. Do you think that the neobanking world can keep up with this? Is it or is it the beginning of the end, so to speak?
No, I actually quite excited. I think that at the end, this will become an ecosystem and everyone will need, as you mentioned many years ago, someone to talk to, right? So the bank always was and still supposed to be a trustworthy uh, a, a organization
Yeah.
that you can go and speak with. Yes, once they became digital and all those branches disappear, there was a break in the trust because suddenly you talk with some, I don't know, some guy in a different country, different continent, and you see that they actually don't know who you are and they don't care about you. So there was a little bit break of trust once the branches disappeared or the person you knew in the branch disappeared. But their function of the bank is still the same. Service is an important thing, and people want and will pay for service, right? So I don't see that the banks or the neobanks will become redundant once crypto and stable coins will be the main currencies. They will still be able to give the service of how to use it, how to secure my currencies. They can still be the wallet that allow me to put money in and out to those crypto blockchains. So there is still an important service role, and maybe if we touch on AI, that will be a part that again goes back to the neobanks. But the neobanks still have a role. Stablecoin is a brilliant way to allow regulators and governments to, let's say, go down from the tree, right? Like they climbed on a high tree, it's all, dangerous money, very dodgy. But once it's stablecoin, we know there is real security behind it. We know there is a real asset
Right.
behind
Yeah.
it. So it's not like fully dodgy virtual currency, but for everyone clarity, a stable coin is a cryptocurrency 100%. It's running on the same technology, same infrastructure, same. It's 100% cryptocurrency. The only thing is that the company or organization that launched it commit that there is a security. So if everyone will want to withdraw, there will be money to give them, and it will not bankrupt. So it's a more a safe way to know that there is some reliability behind the cryptocurrency.
Sure, and we're seeing as well, aren't we? A lot of the kind of, I don't know if you saw my post I put on LinkedIn earlier. I was being a bit tongue in cheek with it. The banks are kind of circling and becoming involved. For those of you listening, I kind of I put a photo of the vultures out of Jungle Book. But in its own sentence, it needs to happen, right? And with the likes of like Western Union, just releasing their own stable coin this year, a lot of the old networks, so to speak, are kind of leaning towards that kind of blockchain and crypto orientated. In terms of like regulation, then where and going back to your earlier points, I suppose this is really where the kind of the stability, the large data sets that was being created with and the procedures put in place over the years in the neobanking systems can really come out trumps. What where do you see the bridge coming here? And yeah, would AI be something which is utilized to help these kind of crypto silo industries or large coin bases work with the neobanks in a long term?
Yeah, really, really good point. So, regulators at the end want customer safety, right? Their point is to, protect the citizens, right? The idea is that in the UK we have the PRA and the FCA, and the first function of them is that if something goes wrong, the people who will pay the price are the masses, the citizens of the country, right? So the regulator is here to protect the system. So sometimes people think the regulator is against us, they want our bad. No, they're kind of like a monitoring control entity that just want to do the checks that you as a business take care of your customers. You are safe, you are cautious, you're not doing anything wrong or bullish or whatever. So, of course, if you're a good business, not only that you comply with the regulations, actually, you're maybe even doing more than what needed from regulation. So now when stablecoins came, like the regulator in America, they actually admit that most of the stablecoins already are following more than what is required, and they kind of copied the regulations from what the actually industry is doing. So if the
Right.
industry is well behaved, there is nothing to be worried from regulations. Now, when it comes to new technologies like blockchain, crypto, of course, and AI, as you said, there is more cautious, right? How this is going to be used. Are you going to bring in all kind of open source technologies that, who knows where they came from and are they monitored? So yeah, so I think that most corporates, of course, are responsible and will do it cautiously and gradually. To the specific point of AI become more and more uh, something that is accessible and available for all neobanks and even traditional banks. And the question is really where and how much we use AI. Because as I said, many of the old banks, they follow operating model. The operating model has policies. The policies were presented to the regulator, approved by the regulator, and now all the employees of the bank follow the policies. Now, if suddenly one of the employees of the bank is AI, how you make the AI follow the policy, right? Suddenly the AI will decide, oh, I will offer this loan to this individual against the policy. Okay, if this happens, who is to punish? Who is to blame? You cannot go and punish the AI, right? If there is an employee, you can always fire the employee, say, always there are people, and we just lay off this person. But if there is AI, the responsibility jumps straight to the top, to the management, to the board of directors, because there is no junior to blame if something goes wrong with AI. So this is why, especially in heavily regulated industries, the rollout of AI is quite careful to see in what business flows, in what workflows, in what decision making we let the AI take over, how we put boundaries. So even the AI goes crazy, it cannot go outside of the boundaries. Let's say pricing. There is a minimum price, maximum price, and you can let the AI go crazy in between the boundaries, right? So the idea, again, of the AI is just to improve the personal service, to make better customer experience, personalization. Again, we cannot afford anymore to have those bankers we had in the branch who knew each one of us and gave us really the best treatment. They knew all our problems and they gave an amazing experience, but it was super expensive. It's not scalable, and the globalization, the competition, and everyone wants cheaper service, right? So also those banks had to cut cost. Otherwise, they will not give us the amazing prices we're receiving. They will be much more expensive. Who will pay for all those bankers? While
Sure.
AI is much more cheaper, we, the consumers, can enjoy from the cost reduction.
And would you, if you was to, say if we were to wave a magic wand, so to speak, and you was building a financial platform from scratch today, would you be in particular where you'd focus the AI elements? Would you use it for like mainly like small transactions, or for example overseas transactions, or would you use it throughout the business and follow quite a forward thinking model, or a forward thinking approach, so to speak?
That's a really good question. I think AI, there are many, many use cases, but let's split it into two groups. One group is customer service. Customer service is the chatbot, is the person who gives the service. We already see how the LLMs are improving. You can have better conversation with an AI. There is actually no need to wait for a real person to get an answer to a known question, right? So definitely AI go into customer service, easy, not risky. Same with sales and marketing. So I will maybe put sales and marketing in the same bracket, like when you want to run campaigns, promotions, reach out with outbound offers or personalized inbound offers to your consumers. AI is great, easy, safe. Where it's a bit more risky but more rewarding is in the core of your competitive edge. So banks, for example, they have two main, let's call it revenue driver. One is lending, which makes a lot of money. So in lending, will you get the AI to take a decision how to underwrite a loan? So will you allow the AI to go through all the criterias of the consumer and decide whether to allow them a loan, yes or not, what amount, and at what price, what is the risk? Okay, so that's where you can make a lot of money if you will use AI, but also the risk is much higher and regulators will feel more uncomfortable and will want to see the boundaries we talked about. Another place which is very big is FX payments, especially in a global world, and when we talk about cryptocurrencies, a lot of money comes from commissions and conversion rates around FX. So when you convert, move money, there is ton of revenue, but also consumers are not stupid. They know this is expensive and they don't do it with you because you don't personalize the price, you don't give the right pricing, the right commission or conversion rates for the right moment. So if you are smart enough to put AI into this user journeys, the user journeys of payments, remittance, moving money, to allow people to also save money, but you will make more money as well. That's a big, big opportunity.
Yeah, I mean the margins, isn't it, with respects to kind of global payments? I think even at the moment you can save
Yeah,
15%, and
yeah.
imagine that on a large scale.
And moving from crypto to fiat, from fiat to crypto, this is still super expensive. Like, we maybe got used to it a little bit, but there is a lot of room for improvement and competition.
Yeah, I was speaking with a guest yesterday actually, and we kind of both had a chuckle. The main the biggest reason that someone's going to want to change something, generally speaking, is when you hurt them in the pocket, right? And I think uh, that kind of leads to a question I've just kind of come up with here is from whilst in these roles, whilst like Tandem, for example, how does it work? 'Cause in terms of the regulator side of things, do you kind of get do you try and build a relationship with these guys? Are you because I kind of from an outsider looking in, I'm just curious. Is it like a scenario where they kind of walk in and it's like the regulators are here, or is it a little bit more of a kind of externally they would monitor you and chip in?
Both in Tandem Bank and in Hapoalim Bank, regulators, it's a ongoing relationship. It's really, in the way how they describe the banking system, there is lines of defense. There is the first line of defense to make the bank stable, which is the executive layer, like my role. And then there is a second line of defense, which is the compliance team within the bank. Third line of defense is the external auditor, like accounting companies are doing that. And then there is the fourth line of defense, which is the regulator. So yes, it's relationship. That they have accounts. So it's not like unknown people. People in the regulator, they have accounts they take care of. So one person in regulator maybe have 5 banks or
Right.
10 banks, depending the regulator. So they know who are their banks. Who is your person. Usually it's a team. It's not one for different like mortgages, savings, credit cards. So they're also built in a similar way. And yes, you keep them always in the loop. Every time you do a monthly committee, steering committee, they will get the materials. When you do an annual plan and you refresh your strategy and your roadmap, you will send them all the materials. If there was also a presentation, they will get the recording of the presentation. They will sit and listen to this. And then they will have also their periodic visits. Sometimes they will come also with ideas to build new ideas. They want users, right? They want to get also feedback from us. So they will ask to present us with some thinking and we'll give them a feedback. So it's very much an open relationship. And in many cases, just to be clear, they are not like telling you what to do. They're usually the opposite, want you to show them how smart you are, how careful you are. They're more like monitoring, observing, rather than here you need to do A, B, C, D, and then you will be compliant. They don't work like this. They want you to convince them that you are doing the right things.
So in that theory, then this is really where the AI question can become quite interesting moving forward because you could have like a CTO who's very AI, a believer and advocate for AI and in a major bank, and then the opposite elsewhere. And I think so. It is quite an interesting period,
Yeah,
and consumers aren't as loyal as we used to be, right?
yeah,
So
yeah.
it's kind of sink or swim in certain scenarios, right?
And also, the regulator cannot prevent competition. If I know that with this AI I will win the market, they cannot, the regulator, come and tell me, no, you're not allowed to use the AI because your competitors don't do it. Like, of course they don't do it, and please don't tell them I'm doing it because I want to have the competitive edge. Of course, the regulator no, they don't, they won't do such things, but they need also to allow the free market and the competition. So as long as you can prove how you take the decisions, what happened with your customers, you show the records backwards to see for them to check you, you will not be said you're not allowed to use this tool or you're allowed. They don't run the business, it's not their responsibility, and they want you to be successful. They just want to reduce risk or mitigate the risk, monitor the risk. That's all.
Sure. And do you think there's a particular going back to the kind of neo to crypto scenario, do you think there's a type of like RWA, for example, which for those of you that are kind of new to this, real world assets, so that in theory you can buy a house, a car, whatever. Do you feel like that's probably one of the easier bridges between crypto and neo banking? Because as you mentioned, I mean, I've got a house, and I can imagine just buying a house through an app and never seeing anyone. It's such a or never speaking with anyone, mortgage advisors and whatnot. Is this the kind of the easiest bridge, do you think?
I think it's amazing opportunity for banks, neobanks and traditional banks. No one really aware, but to run a bank is very expensive, mainly to run an old bank. They have those old mainframes, running your own ledger is very expensive. And if you can give the service, sell the product, but have the ledger running on a distributed, almost free from your perspective, infrastructure of blockchain for those real world assets or cryptocurrencies, you reduce a lot of the cost, the cybersecurity cost, the operational cost. A lot of the cost is disappeared, been cut out. Today, most of the money in the world is run on computers that are being paid by the banks. Now, we pay this eventually as consumers because they need to put this cost into our, prices. But yeah, for banks also, there is any additional operational cost that they will get relief. And of course, competition, as you say, the first that will go, if the product is exciting, it solves people problem because I don't have, let's say, maybe 100,000 pounds to now put in real estate, but I do have 1,000 pounds. So why can't I put this 1,000 pound in real estate, and specifically, I don't know, in Chelsea or in I don't know, North London? Like, why can't I? Like, why do I need everything or nothing? So banks that will start to come with those kind of solutions, products that help, their consumers to manage their life with money, to be more smart, to move faster, they will definitely enjoy the benefit.
Nice. Yeah, I mean, I kind of started this call thinking in my head I'm much more aligned with the blockchain and crypto and currencies, etc. in general. But it's hard, isn't it, to kind of just completely switch the kind of the old way of doing things. Maybe the bad way, maybe a bad way of explaining it, but just move completely in a new direction without having that kind of like you said, the trust, that
Yeah,
element of we've been here, we've done this before,
yeah,
and this is really what's going to bring this to the center stage, isn't it?
yeah.
As opposed to whereas crypto in the past has kind of been on the periphery a little bit. We did actually we've kind of touched on one of the questions I had prepared, so I've kind of just tweaked it slightly. Um, so should central banks allow neobanks direct access to CBDCs? And if they did, where do you think this would stand in like a crypto standpoint? How would it be stacked massively in favor with the banks as opposed to, you know, generic tokens?
Yeah, this is yeah, very. It's really hard to know and hard to say how this will evolve. In general, again, the regulator, the government is responsible for its citizens and needs to follow the income tax regulations and the financial regulations. And as long as the ecosystem will have the right tools to follow the money, right? Not only for preventing money laundering, but also for basics, income tax returns and stuff like, okay, just we'll see where the money come in, how much come in, how much went out. As long as the ecosystem will have the transparency and the control of the flow of the money, I don't believe there will be any resistance because everyone will keep having what they used to have. It will just run on a much cheaper, global, secured, safe infrastructure. So, as you said, like Web3 is actually a big evolution from Web 2. But the use cases, the layer of application, don't necessarily need to change a lot, right? Like, at the end, it's very different than, introducing the smartphone or the Wi-Fi, where actually the interface changed quite a lot. In Web 3, it's much more maybe like the Web 1, where there is a new infrastructure and now you can improve your applications to be cheaper, faster, more secure, running on the Web 3. But from user experience, it shouldn't look or feel different. Of course, it should feel safer, cheaper, faster, but the actual user journeys, customer experiences are what we know today, just on a much, much better, superior infrastructure.
Yeah, I mean that's an interesting point, isn't it? I think if you used to talk about like we've had a bit of banter about football in the past, and use sport as an example. Um, Marginal gains is a huge thing in sport, and I think this is similar in that respect, that
Yeah,
the infrastructure of crypto and the bank world just needs to improve slightly ever so much every couple of months, and this new adaptation here just makes the whole system sing harmoniously. That's really
exactly.
what we're looking to achieve.
Exactly. Exactly.
Good, yeah. Well, look, I really appreciate taking the time out. I knew coming into this chat, it's always easy chatting with yourself. Super approachable and whatnot. So I really appreciate coming on the call. What I wanted to do is just kind of give you a bit of a platform. Really, was there um, free roam really here for the next couple of minutes, really to kind of bring up or talk in particular about any of the topics that we've kind of highlighted, or where do you think that you're trying to position yourself moving forward, and the reasons behind that, as a kind of a to wrap things up, and yeah, I'll leave it with you.
Thank you very much. I think what we touched is very much like the flow that I was lucky enough in my career to go through. I've started with this data journey, evolved into AI, started to build AI platforms, then found myself in a very old bank, and then was lucky to build one of the first neobanks in UK. And from there, started to do some use cases around smart contracts on blockchain and build, wallets. So I think like I never in my career thought, oh, this is a choice I need to make. It's more like was flowing, or the industry. I feel I very much flow with the industry. So, I am super excited from those blockchain, crypto, Web 3.0, just because I can imagine and see what great value it will bring both for us, the business owners, the business leaders, but of course, mainly to the consumers that will enjoy a better service. So yeah, I really, really enjoy these days. I think there is a lot of innovation happening. I think both here in the UK, but also across Europe, we have still a lot to do. When I look at, California or Singapore or Middle East, it feels a little bit that we're somehow a bit behind with blockchain, crypto, Web3. Also, I think Web3 got a hit which was not really justified, on those NFTs, and like suddenly everything, yeah, was colored black just because NFTs were not like valid business case. But I think this is yet to be concluded. I think there is massive potential. And of course, AI for me was always a great tool to give better customer experience, better customer service. So I think AI is definitely here to stay. We need to keep using it wherever and much and safely. Yeah, it was really great talking to you.
Nice. Well, look, I'm sure we're going to meet each other again and have many more conversations. I'd love to welcome you back on, maybe in 6 months to 12 months or whatnot. Once we and see, if everything we're chatting about today, see what's happened. So, yeah, thanks for coming.
Great.